Good morning, everyone. Darius Dale here to present our macro minute for Tuesday, March 22nd, 2022. Starting with markets, we have stocks up this morning, commodities mixed, crypto up, dollar down, global bond yields up. Big news this morning, you have Germany and Hungary putting the brakes on a potential embargo by the European Union on Russian crude oil imports. That's obviously deepening differences within the bloc over how to further punish Putin for his invasion of Ukraine. Big movers this morning, obviously WTI off, Brent crude oil off, down over a percent a piece on that headline. You have Bitcoin and Ethereum up around 4% a piece. We'd be looking for decisive breaks above 45K on Bitcoin and 3.2 or 3,200 on Ethereum, or consolidation north of 43K and 3.1K, respectively, to confirm the start of a potential sustained recovery into the spring. Will Ethereum 2.0 be the bull catalyst everyone's hoping it will be, or is everyone already long because of that very obvious catalyst? Very similar to what we were talking about with options last week. Hey, when the lack of a fresh bearish catalyst, it's hard for markets to continue to sustain that momentum to the downside. You actually need to get more bearish catalysts, and you could actually see the same thing to the upside with respect to crypto. So be aware of all those dynamics. Obviously, it's a pretty interesting week here. On the macro front, so no key economic data were released. So I wanted to spend some time kind of digging into what appears to be a growing rift among European policymakers on the next steps for dealing with Putin's aggression in Ukraine. So leaning hawkish of late, you got France, Clement Boon, his secretary, the France's Secretary of State for European Affairs, basically came out this morning and said we'll regularly increase pressure on Ukraine, on Russia rather. If we need to impose new packages of sanctions, we will do so. And discussions are underway. Those discussions were further confirmed by EU Foreign Policy Chief Joseph Borrell, who said they were discussing those incremental sanctions this week. But then leaning dovish of late, obviously, I mentioned Germany and Hungary, kind of digging into that. You had German Finance Minister Christian Lindner, quote, we will hope for peace soon, but when it's achieved, but we will also be there to support the reconstruction. Doesn't sound like we were doing anything to promote peace or to calm Russia down. They're just waiting for the dust to settle. So that's a big shift, in my opinion, from a rhetorical standpoint. And then you having this growing spat between Ukraine and Hungary. Hungary's foreign minister, I'm going to mispronounce his name, Peter Szijjártó. He's sort of kind of close with Russia or Putin, or he's close with the president of Ukraine, who is close ties to Russia. They came out and said that obviously Russian energy imports are a red line, and that Budapest would not support a no-fly zone in Ukrainian airspace. So you're starting to see a little bit more rift as these the cost of sanctions are starting to bite and take their toll across Europe. The key takeaway as it relates to markets, as long as European leaders are split on what to do next, the likelihood of the situation getting worse from a global capital markets perspective remains low. The big issue as it relates to asset markets is more from the medium term impact on global manufacturing from commodity supply shortages and the impact on global consumer spending from declining discretionary demand and demand destruction associated with that. So just keep your eye on all these things. Nothing happens in a straight line in markets or the economy. Just got to come back and wake up in the morning, refresh the models, and do our jobs. Speaking of the models, with respect to today's probable range setups, S&P 500 still bearish from the perspective of our volatility adjusted momentum signal with 10% downside in its probable range. It's still at the upper boundary, so still overbought this morning, probing the upper boundary of its probable range. As you guys know, watching this program for several months now, whenever you start to see that probing, it's usually a leading indicator of a phase transition from a VAMS perspective. So we're keeping an eye on that. Same situation with Bitcoin and Ethereum this morning. WTI, so neutral VAMS minus 20% of downside versus 15% of upside. Bloomberg Dollar Index, bullish VAMS minus 0.6% of downside versus 1.8% of upside. 10-year Treasury yield, still bullish VAMS. What a move. 43 basis points of downside in its probable range with only 3 basis points of upside. So getting exhausted there. Bitcoin, as I mentioned, at the upper boundary is probable range with 19% of downside. Still bearish VAMS. Still bearish VAMS. Ethereum as well, 23% of downside. Still probing the upper boundary of its probable range. Kind of S&P, Bitcoin, Ethereum, all these measures of risk are kind of in very similar quantitative setups here. So we're definitely studying and watching this week alongside our cost asset correction risk indicator. And then lastly, gold. Minus 3% of downside versus 6% of upside in its probable range. That is shifted back to neutral VAMS based on the move we saw in real interest rates. That is the volatility adjustment for that indicator. So with that, Darius Dale presenting our macro minute for Tuesday, March 22nd, 2022. Best of luck out there today.